I remember watching the 1996 finals, the Sonics versus the Bulls, and I remember that era where Nike Air Jordans were so coveted that I would wake up as a kid and find out that people were getting murdered for a pair of shoes. Now, yes, Jordan was in his prime. He was incredible. He changed the league. He did all kinds of things for the NBA. And Nike was smart enough to be at the front of that scene and to say, hey, this is our guy. They did the same thing with Tiger Woods. And I think in the past, Nike's done really well at identifying people that are going to change the game and then getting them in and getting them locked in with the brand so that they can move a lot of product. I think this company is definitely a smart one. But in recent years, we've seen some controversy. Obviously, when Colin Kaepernick was in decline in his career and decided, hey, I'm going to blame everything on racism in politics rather than his own ineptitude, I remember thinking that it's hard for me to be excited about a brand that is backing a guy that I have zero respect for. Nike has made some interesting moves recently, and if you've been following their stock price at all, it has absolutely plummeted. It's about 50% down from its all-time high, which was not that far back. So what's going on with Nike? Well, several things are happening. I want to talk about them a little bit, and then I want to tell you why I'm interested in Nike, why I'm still looking at this stock with a lot of potential. Let's start out by talking about some things they're doing recently and how they're impacting the brand. First of all, Major League Baseball. Now, I'm not the kind of person who's going to get into a big stink and get super excited about what's going on with the MLB jerseys, but I can tell you that there was a ton of controversy. The articles being written, oh my gosh, Nike has messed up the MLB uniform. And I thought, oh, whatever, I don't care. They showed them side by side and I thought, they look a little worse. Oh, well, I don't really care. But the players did not like them. The fans did not like them. And so Nike has had this really negative response to the MLB uniforms. Nobody really enjoying those. They've also seen a lot of competition come into the marketplace. New brands like On are coming in and trying to eat up their market share. On top of all that, they're making a very risky investment into the WNBA. Now, say what you want about the WNBA, but that's a product that I will probably never watch. I have not watched one game in my life. I will probably go to the grave having watched 0 games of the WNBA. Why is that? I think the product stinks. I think it's not a good product. Now, that said, we're going to talk about that more in depth for those of you who are out there going, what? How dare you? You angry misogynist, you. I will destroy you. Hold on. Let me talk about it a little bit more before you comment below about what a terrible person I am. I actually have an opinion that I think you might be interested in on that subject, but I want to talk about Nike as a whole and why I'm looking at this one as a swing trade. Typically, when we break down a stock, which we're going to do today, I give you this in-depth on the company and why I think it can be a good long-term hold. I'm not going to do that with Nike today. I'm going to give you some short-term factors and why I think this stock is set up for a bounce and why I'm going to be holding it in the short term, looking for just the gains, and then I'm willing to get away from this one. Let's get into it. So an amazing thing happened this year, and it is reminiscent of both Michael Jordan's run and back to Tiger Woods, when these sports had some audience and some viewership, but these dynamic figures came in and they absolutely blew up the game and made Nike a ton of money as they sold gear related and tied to that player. Women's college hoops this year actually brought in some great numbers, but let's talk about what happened after that season wrapped up. We went to the WNBA draft, which the year prior, in 2023, had about 500,000 people that tuned in to watch. Now, that's a fairly small audience. It's not nothing, but it's not much of an audience. This year's draft, with Caitlin Clark in it, saw 2.5 million viewers tune in. That's a 5x of the audience in 1 year. Now, that is a huge change in the product. And so I think what Nike has identified very well is that, yes, maybe this isn't a league that people are excited about in the same way that golf had some audience that was excited about it, but all of a sudden saw this rapid growth when Tiger Woods came in. They're identifying that same moment occurring in women's hoops. And so they're going to jump in and get their person on board who is then going to potentially sell them and move a ton of product for them. What's happening right now is that you're seeing audience growth. And I think that audience growth is going to turn into, new girls basketball players that maybe wouldn't have been there before that all of a sudden want to buy these products. They want to buy her shoes. And I think Nike's going to do well with it, even though it's maybe a little bit concerning that they're paying all this money up front without any guaranteed return on a product that doesn't have a particularly large audience right now. So what's going on with Nike? Why is it so beaten down? Well, there's a lot of factors, and these are some of them, but I think one of the things that's really important to recognize about Nike is that it relies on a strong consumer. And right now, the consumer, as we're finding out in all the restaurant stats in the market, is getting killed. The consumer is getting hammered. So why would I then be excited about Nike if we know that they rely on the consumer and the consumer is getting hit? Again, this is one that I don't necessarily want to hold long term right now, but I am seeing an opportunity for a swing trade where I think it's going to have a bounce to the upside. As always, before we move on and look at all the stats behind Nike, I want to remind you I might just be a knucklehead. This is not financial advice. You should not necessarily invest your money as I am. I'm just showing you what I'm doing and why. Let's get into it right now with some stats on the financial side on the back end. All right, so first, let's look at some quarterly results from Nike. So you can see that our overall chart, let me go back to a 5-year chart here. You can see that we were at $180. We're now sitting at about $90 as of right now. I'm into this for $91 a share. So now we've seen this big price decline. Let's look at revenue. Revenue doesn't look that bad. It looks like it's fairly stable. Okay, we're seeing nice growth here, continual growth, so not a huge problem there. If we go to free cash flow, again, we can see free cash flows doing just fine. They're moving up. We like to see that. As far as the cash and debt, we've got a lot of cash on hand, $11 billion in cash and some debt that can be deployed if needed. And you can see this is $137 billion in market cap. We have only $6 billion in debt with $11 billion in cash ready to deploy if needed. And then for dividends, you can see nice, strong dividend growth. Again, this is a company that if you had to hold it, would you be upset? Probably not. This company's done pretty well over time. Shares outstanding coming back down, which is nice to see as a company. We like, as the investor, we want to see that. And now we're looking at return on capital employed, and I'm going to switch over to the annual view on this one. And you can see for this that this is probably one of the more concerning things. You're still seeing an 18% return, but at one point, not that long ago, you were seeing a 28% return. So we are seeing this slow decline as Nike is trying to deal with a weakening consumer and how to make margins and keep them nice and high so that they're making a good return and yet still also have the consumer still buying. If you get your prices too high, the brand maybe is going to go, they're going to go, the consumer says, well, let me try this new brand. Hey, let me maybe try this other shoe because I don't necessarily want to spend that price point on this Nike shoe. So Nike's kind of got this middle ground. Now, the company makes a lot of products that are highly sought after. The brand recognition is really high. And even in the secondary market, for a while I did some reselling on eBay and I would, buy a Nike t-shirt and that thing would sell, just a swoosh on a t-shirt would sell for more than almost anything else I had. Why? Because people like this brand. They like that Nike swoosh. They are consistent, reliable customers that want to continue to buy Nike brand. They think Nike is kind of the cream of the crop, the Cadillac of the shoe and clothing industry. So lots of stability here. This is one of the things I really like. The company is, yes, showing some projections that are showing growth, but diminished growth, right? So, hey, we're not maybe going to be growing as rapidly as we were. Maybe this is going to start to level off or flatten a little bit. And a lot of what's built into a company's price, their actual stock price, is that future projection. So what could this company be? Now, if we look at what revenue growth has done, if you're just to say, hey, this chart will just always continue moving up like this, you're going to see, man, like this, 10 years from now, this is just going to, if this continues, it's going to be worth this much. Well, that's what most people were doing. Now the consumer maybe not, projections getting a little lower, the consumer maybe not so strong, people getting concerned. This is starting to potentially hit Nike's future, and that's what's getting discounted is all that future potential earning, right? So yes, there's other factors, but this is a major factor. Let's bring up Coca-Cola now. I brought up their chart here. We're going to take a look at it because Coca-Cola is going to give you a similar example as to what's happening with Nike right now, where projections just went to the moon. 1998, we're at $42 a share. Things are looking amazing, and if we go back far enough on the revenue, we can see that, right in this range, we're saying, oh my gosh, it's we've got this projection and it's just going to keep going straight up. And then it starts to level off and people go, oh no, oh no, it's not what we thought it was. And there's a panic, a little bit of a panic, right? So if we go back now, we've got this high point. It's 1998. And then people are recognizing that, oh, wait a second, things are starting to level out. That doesn't look so good. And what happens? Giant crash, okay? So prior to this rise, we were sitting at $2.32. It gets all the way up to $42, and it crashes back down to about half the price, $20, okay? Now, over time, that revenue is recovered, and boom, look where we are today. We're sitting at like $63, okay, $62. So there's been a natural recovery, and you can see with the revenue that's kind of the same pattern. We go way up, and then a little bit of a correction, and then back up. So we're seeing this kind of, oh, wait, we're okay. Things are fine. So it levels, but hey, there it goes again. It's growing, and then people get excited about it, and they're buying back in. So with Nike, what Nike is seeing is not even that. Nike's seeing the potential of what could be coming, and people are starting to discount it ahead of time, right? So with these earnings and this revenue, we're saying, oh, this looks really good. If we go to the quarterly here instead, they're saying, we think maybe projections are starting to level off. Things could level off, and maybe we won't be growing quite so quickly. So people are saying, oh, this could flatten out. And so they're taking all of that future potential growth that could have been there, and they're moving it away. So now we're saying, hey, we think this thing is not going to be worth what we thought initially. And you can see that that's then hit the price. Well, look, we had $180. We're down to half of that. Again, this is very similar to Coca-Cola. And so you can see what is probably going to be forming as some support. And I want to talk about that. Let's go over to the chart really quick. All right, so here's the chart on Nike, and I just wanted to show you what I'm expecting. I've got this long trend line going all the way back to 2012 that you can see here. So starting off that 2012, bouncing off of it in 2017, 2020, and coming back in right here, here, and here. So this line has been holding for a very long time. This is a very long-term trend. And then we also have this flat line coming across right here where you're seeing tons of hits. Hit here, here, here. There's a bottom. It does pierce through, but then comes back, hits here, bounces here. So this line is also very strong. Lots of support at this level. And I think it's going to be hard to break down any further substantially. Yes, there's always downside, but I think there's so much support in this range. I don't expect it to go much lower. I think there's going to be plenty of buyers here. I think your sellers are going to dry up, and you're really now looking at people that are going to want to be looking for that opportunity, which I think is here. And I think here's where resistance comes back in. You can see it at about 108, somewhere in that range, 108 to 110. And then again, somewhere in this like 122 to 125 range. So I am hoping we'll get through this first amount of support and potentially get up into this range again. I'll be looking to get out somewhere around 120 possibly. I think that's a pretty good profit starting at 91, getting about $30 a share. That's a really nice return. So there's the charts and what I'm thinking on this stock. Let me give you two quick articles. I always like to give you a positive and a negative article on this company. Sneaker and athletic apparel giant Nike continues to be one of the worst performers in the Dow Jones Industrial Average, down 26% in the last 12 months, including a 12% drawdown so far in 2024. Corporate earnings released at the end of March showed a continued slowdown of sales in China, further depressing the share price. The chronic underperformances make Nike a Dow stock to sell in May before things get any worse. So what are they saying? They're saying the consumer is hurting not just here, but globally, as it seems things are slowing down in all economies, not just ours. Okay, but I want to point this out. Even in this negative article, in its latest print, Nike reported that its China sales increased 5% on an annualized basis, which marked a deceleration as that country's economy has been slowing down. Okay, so 5% growth, not decline. Yes, maybe you're not making the highest projections, but you're not necessarily seeing full-on decline. You're just seeing a slowing rate of growth. In Europe, the Middle East and Africa revenue declined 3% year over year. Okay, so that is negative. Let's look at the positive article now. With a yield of 1.58%, which is talking about the dividend yield, Nike is slowly bouncing from recent lows. Here's what I like here. He's talking about the price point now, which is close to $93.94. I'd like to see it retest $120. Hey, look at that. All of our technicals came in, and it's matching up to that similar price point that this article is recommending. I think that's kind of cool. This is the last thing I want to point out from this article. I won't read you the whole thing, but it says, with a good deal of negativity priced in, analysts are still bullish. Stifel, for example, has a buy rating with a target price of $119. So, and it lists several analysts that are interested and coming to a similar conclusion on what it should be worth. definitely more than the 91 that it's at now. I would agree with that. The technicals would agree with that. And the company data behind it, I think, also agrees with it. I don't think it's showing you a company that deserves to have such a massive drawdown in its stock price. It just needed that correction from an unrealistic target of what the earnings should be down to a realistic target. There's a saying that the stock market is a great tool for giving you the true value of something over time. What will naturally happen is that people will get overexcited about a company, they'll get underexcited about a company, and the stock market will find that middle ground. It'll find the buyers and sellers, and eventually it'll smooth out, and boom, that's the value of your company. So you want to be, as a buyer, looking for those opportunities where something has been over discounted, right? It's come down too far based on what it has going for it financially and the data that is behind the company, the future projections, and say, this is an opportunity. I got to take care of it. All right. Well, you know now that I think there's some potential gains to be had here and there's some future recovery coming, but I'm curious, what do you think? Hey, thanks for hanging out with me today. If you enjoyed this and you're up for helping the channel out, like it and sub it below. See you for the next one.